Most beginner traders lose money even before they enter a trade. I know this because I've made these exact mistakes, and it all comes down to how support and resistance is used. Support and resistance works. The problem isn't the strategy, it's how beginners use it. So let me show you the 5 most common mistakes beginners do when drawing support and resistance and how to solve it. Hello traders, welcome back to my channel. Let's get right into it. So the first common mistake is drawing too many lines. As you can see in this graph, there's too many noises, it looks so confusing. How are you supposed to trade this setup when there's so many support and resistance? Which support line are you supposed to use? Which resistance lines are you supposed to use? Don't worry, I'm gonna tell you how. So, number one, you need to figure out what the market structure is before figuring out your support and resistance. Once you figure out what the market structure is, whether it's an uptrend or a downtrend, you can figure out if you want to find support and resistance. So let's say this is an uptrend, right? You want to find the most recent levels. And what is the most recent levels? So let me give you an example of the most recent levels. Right now, we're on the US Tech 100. We can see that is an uptrend with some minor pullback. For now, I'm not going to trade, but for now, I just want to, for demonstration purpose, let's say we are trying to find support. We go on the hourly time frame. Look, we can see there's many lines. Okay. You just want to draw the 2 most recent lines, as that will make your setup clean and you'll figure out whether you should enter. You just need the recent price where price is reacting now. So price is over there, right? My first resistance I can see is this over here. And I can see another one where it has little lows just over here. There we go. So if I was to trade this trade, these would be my 2 most recent support levels. Well, now if you were to zoom out, you could say, oh, this is also support. Yes, but it wouldn't make sense for you to find support level, as this would have broken structure and it would have been a downtrend and you would rather find resistance. And it doesn't make sense for you to wait till it goes down here, because it won't go down there, right? You're just going to be in the trade forever and never and ever. And then that's where mistakes will come in, because you're going to be like, oh, let me just enter. And then you're going to enter and then you're just going to lose money. Number 2 is drawing your lines wrong or your zones wrong. So this one's a bit controversial, as some people prefer lines and some people prefer zones. I would say stick to zones, as most beginner traders, when they do draw lines, this is what I did. This is why I messed up and lost like 3K. That was because I expected, as a beginner trader, when let's say price was 101, I expected price to come to 101. When in reality, price rarely reacts to an exact line, which is why I draw zones, as zones give you a range to work with and you're not limited to an exact price. Although that said, with lines, it works with strong high lows and round numbers. I'll quickly give you an example why zone is better than lines. Look, over here, you can see price is reacting within the zone, and then once it goes out of the zone, that is when you would enter. Whereas with a line, it's very easy to get faked out, stomped out, only for it to go into the direction that you want it to go. Mistake number 3 is ignoring higher time frames. Your higher time frames are stronger support and resistance zones. A lot of people are scalpers, are like, oh, what's the point of looking at higher time frame when I'm just looking at the 5 minutes? True, but that means your 5-minute time frame is a weaker time frame, as your hourly or your, let's say, daily are your stronger time frame. The reason for this is because it will have 2 to 3 bounces, and that shows price has reacted many times historically within that support zone or resistance zone. So higher time frames does not equate to weaker zones. Lower time frame does. Let me show you an example. Over here we can see our support level on the daily time frame. Yeah, we can also say this over here is our support level. Now, if you want to know how to draw support and resistance levels, I am not going to go through this in this video. However, I have done a separate video on that, which I will link down below. Now, if you was to go onto the hourly time frame and you zoom out, you can see that these are major support zones over here. You see, look, price has respected it, and look, you can see, look, bounce, bounce, swing low, bounce, swing low, bounce, swing low, bounce. You see, these are strong support levels. Price is above our support zone. So what we could do in this scenario is just refine it and make our rectangle smaller, because look, if you go on the 5-minute time frame, it looks very big. So what you can do is you can make it smaller like this. There we go. Supposed to refine it on the hourly, then you quickly look back on the daily. Yep, it's respecting the zones. And then when you go on the 5-minute time frame, you can see it is just on support. To be honest, you can refine it even more like this, and then you can see it has gone above it, but we don't have a strong confirmation, therefore you shouldn't enter. Now that leads on to mistake number 4. I'm not gonna lie, I've done this mistake so many times and I've learned the hard way how to do this. Never, 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 never enter a trade, even if you've driven support and resistance, without a confirmation, guys, okay? Confirmation is key. If there is no confirmation, you're just entering blindly. Thinking and be like, oh, okay, I have a feeling it's going to go up, therefore I am going to trade. That is the most dumbest thing you guys can ever do. I learned from my mistakes, okay? That is how I lost a lot of money on my trade. By entering a trade just because I thought, oh, okay, it's going to go up. I know it's going to go up because I have a feeling it's going to go up. Only to turn out the market goes against you. And that is because the market is not your friend. Okay, repeat after me. The market is not your friend. A level, it's on its own, is not a trade. Price has to show you where it wants to move. That is why price action is very important. So even if you did learn support and resistance, you guys need to learn what candlestick patterns are, what chart patterns are, that's such as V-shaped patterns, candle patterns such as bullish engulfing, hammers, etc. You can read the book. You can read literally, if you want to learn how to read a candlestick, just read the book by Steve Neeson or just watch a bunch of YouTube videos. That's how you guys will learn, right? So let me give you an example, right? Say we drew this as our support level. We're like, oh, okay, this is our support level. Oh, look, I can see it's going up. Therefore, I'm going to enter only for this trade to go against you. And you're going to get stopped out by a loss. And if you haven't put a stop loss, you're going to wipe your account, right? Now, you're probably thinking, oh, but I thought it was going to go up. No, it wasn't going to go up. You had no confirmation. You literally had a big red candle which showed strong momentum that sellers took control. And technically, this has engulfed the green candle. Therefore, sellers are in control. And there is some sort of pullback. Therefore, as being a trader, I am not going to counter trend, as counter trends are very risky. You could counter trend once you're confident, but I'm just going to wait for it to touch my second support zone. And if it hasn't touched my second support zone and it keeps going down, therefore I am going to sell. Okay, that is how you have to think about it. Now this brings us on to mistake number 5. This is also why I blew a bit of my account. That is because as beginner traders, we have no patience and we just want to get into the trade and we just want to trade, for instance, consolidation. This essentially is an emotional mistake. It's not a technical mistake. If price is being very choppy, you have to wait as a trader, and essentially it is a patience game. Essentially, most bad trades come from boredom. You're like, oh, you know what? I think it's going to go up. It's an uptrend. It might break out. Therefore, I'm just going to enter only for you to get stopped out, for it to only go into the direction you... Oh, sorry guys, the camera cut off. So where was we? Let's say you entered in a consolidation period, right? And you just entered because you wasn't bothered to wait for an entry, okay? You just entered, right? You're like, you know what? It's an uptrend. Yes, there's a consolidation, but it's going to break out because that's the textbook definition, right? You've entered only to go the opposite direction as you entered too early and you didn't find a confirmation for you to enter. So yeah, essentially it's not bad analysis, but it is your emotions. No momentum equals no trade. So yeah, these are the 5 most common beginner mistakes that beginner traders do when drawing support and resistance. As I mentioned, these are all the 5 mistakes I have done, which is why I have listed all of them. There is probably more out there, but these are the 5 most common ones that I remember that I have done as a beginner trader. And hopefully you guys learn a thing or two from this, so you guys learn from my mistakes and not do the same mistakes that I did. Fix these 5 things and support and resistance becomes boring, and boring is exactly how you want to trade. If you like this video, smash that like button and don't forget to subscribe for more videos like this. Ciao!